Hello and welcome to today's live Learn Extra live accounting session for the matrics today. Welcome grade 12s. I hope you guys have had a really good Thursday. It's been nice and warm and sunny outside, but it's time to knock it down. Let's do some accounting. We're here with Ashraf. How are you doing, Ashraf?
Good, and you?
I'm good. It's
long,
been
long since we've done a show together.
yeah, we haven't done a show for quite a while.
Okay, good. So today's the day.
Yeah, today's going to be a good lesson, guys. I hope you guys are focused. If you guys don't remember me from the last time I was on, my name is Lloyd. Guys, so remember all the things you can find from today's show are on our Facebook page. All you have to do is head over to our Facebook page. All the notes for today's lessons will be there, as well as your chance to win this brand new Casio calculator. Answer the test yourself question, and you could walk away with one. But guys, let's get on with the lesson.
Yes, guys. What are we looking at today? We're revising reconciliations, right? You know, reconciliation means to bring together, to reconcile differences. Okay, now, how does that apply in an accounting context? Let's look at this here. One, obviously we said we're going to revise our recons, but before we go there, let's go to our challenge question. And the challenge question says, a very important question. It says, how many types of creditors reconciliations do you get? Right? And I'll just take it one step further. Once you've identified how many types of creditors recons you get, also explain the difference between the types. That's all that I'm saying for now. More about that later. Okay, now, let's start off with the bank reconciliation statement. This one here. What does it entail? What are we doing? We are reconciling our bank account balance as it appears in our records, as opposed to the bank statement balance that we are receiving from the bank. Ideally, the two are supposed to be the same. Doesn't happen because of various differences. Now, what are those differences? They can be categorized into two components, namely timing differences, and the other one is bank account adjustments and or errors and omissions. Remember, this is a revision lesson, so we're not going to go into a whole explanation. We've done this already. All that we're saying is we are reconciling the bank account balance with our bank statement balance as we receive it from the bank. Right? And obviously, there's a host of differences that you're going to come across. You'll see when we actually work with the question, what are those differences? Okay, done and dusted. The debtors reconciliation statement. Firstly, ask yourself this question: what are we reconciling? And the answer to that is, we are reconciling our debtors control balance, which is an account that we keep in our general ledger, with what? With the debtors list. And where is that extracted from? That is extracted from your debtors ledger. Okay, now I'm going to mention something else here. When we speak about debtors reconciliation, I'm going to speak about the triple entry. And now somebody must be asking the question, has Ashraf lost it completely? Because we know about the double entry in accounting, don't we? Debit and credit. Where does the triple entry come from? Listen, guys, yes, there is a triple entry. Now, where's the triple entry? You have a double entry in your general ledger, right? An example would be cash sales. You debit bank and you credit sales. Okay? We're not talking about the second part of the entry. Obviously, the second part of the entry would be a debit to my cost of sales and a credit to trading stock. What I'm referring to here is sometimes, or whenever we are dealing with a debtor, then we also make a single entry where in the debtor's ledger, and therefore we refer to that component as the triple entry principle. Double entry in your general ledger and a single entry in your subsidiary ledger. And therefore, at all times, you want your debtors control account to balance with your debtors list, which is an extract of your debtors ledger. Comprehendi? Understand? Great. Now, the creditors reconciliation. by the same token, you have a creditor's control account in your general ledger, right? Subjected to the normal double entry principle, but at the same time, you have entries for specific creditors where in your creditor's ledger. So there again, when dealing with a creditor, you are dealing in principle, you are dealing with a double entry in your general ledger and a single entry in your creditor's ledger. So once again, the triple entry principle. Now, with regards to the creditor's recon, one is to reconcile your creditor's control account with your creditor's list, which is an internal reconciliation. Got that? But at the same time, sometimes it becomes necessary. And in terms of the CAPS curriculum, you also need to know that you have to reconcile the creditor's statement that we receive with the creditor's account as it appears in our creditor's ledger. And that's the one that we refer to as the external reconciliation. Now remember, this external reconciliation is very similar to the bank reconciliation that you are familiar with, that you've been doing from grade 11. Okay, so what have I done? I've summarized for you all the various types of reconciliations that we can get. And taking that into account, let's move on into a question. In question 1, we are told, the bank reconciliation, the information presented below is from the cash records of Gateway Stores for April 2013, the last month of this financial year. The information states that we are given a bank reconciliation statement, obviously, of the previous month, right? And the first question that we have to answer is the balance according to the bank statement favorable or unfavorable? Explain. Let's go back to that bank recon and see what do we have. It says here, credit balance as per bank statement, a credit balance as per bank statement, an amount of 4,280. Okay, now understand the relationship between you and your bank. If the bank sends you a bank statement and it shows a credit balance, are you going to be thrilled or are you going to be worried? And the answer is you're going to be thrilled. Why? Because the bank is telling you that we are owing you money, and therefore a credit balance on your bank statement indicates that in your books it's a favorable bank balance. So the answer to this question is it is a favorable bank balance, right? And what else do we know? The question here says explain. It means that what? The bank owes us money. It means that the bank owes the business money. So clearly you can see that if you have a credit balance as per bank statement, it indicates that in your records, think of it this way. Let me show you what I'm talking about. In your account, if you had a bank account, it's going to indicate a debit balance because it's a favorable bank balance. The bank owes us that money. Got that? So in other words, if you receive a bank statement that has a debit balance, what does it mean? It means, therefore, that you are owing the bank money and it's an overdraft in your records. Always look at your bank in terms of the relationship between you and your bank as that of a debtor and a creditor. when you have a favorable bank balance, a debit balance in our records, what does it indicate? It indicates it's an asset account. It indicates that the bank owes us that money. Got it? Okay, next question. The next question says, check number 784 should not appear on the reconciliation statement. Explain why. Now let's find out. Check number 784. There goes. And then it says there, what does it say? It says the 2nd of September 2012. Now, which month are we working for? Our information here is as at the 30th of April 2013. Remember, that's the 2nd of September 2012. Now, obviously, September is when the check was issued. Notice, the 2nd of September. So you have September, October, November, December, January, February, March, April. How many months have gone by? Plus minus 8 months? And the check has not been presented for payment. What happens? Yes, accounting boffins out there, you ought to know that once a check is older than 6 months, is it older than 6 months? Certainly it is. So therefore, the question wants to know from you, why should it not appear on the recon? One, this is what we call a stale check. Okay? What do we mean by a stale check? By that we mean that the check is no longer negotiable. You cannot use it anymore. Why? After a period of 6 months, that check becomes invalid. And therefore, this check needs to be cancelled. Right? And the cancellation of this check will take place. Now, obviously, this is a check that we have issued, and for whatever reason, this check has not been presented for payment. That means the money hasn't left our account. Therefore, this check will have to be cancelled. And if we look at the next question, okay, let's get on with this question. We'll come to the next question. This check has to be cancelled. Reason, the money has not left our account. So therefore, we will cancel this check where in the cash receipts journal. Why? Because when we initially wrote out this check, it was entered and issued and in the cash payments journal. So the cancellation thereof will take place in the cash receipts journal. Just to take this question a little bit further, although not asked for, depending on what the check was written out for, you would have to cancel that particular entry. And to illustrate further, let's assume that this check was given as a donation. You would then reverse the entry, whereby you would debit the bank account. Okay? Let's write it in so you can see it. Now, obviously, I'm just giving you more information, not applicable to this particular question, but information that is beneficial. If it was for a donation, you would now debit your bank account to cancel that check, and you would credit the donation account. Now, once again, please understand that this is an example that I'm giving you. It's not applicable to this particular question. Just to show you that when a check is stale, how do we go about canceling that check? Okay. So obviously you can see in this particular type of question on the bank reconciliation statement, you are expected to identify the differences and how to go about treating these differences, right? Totally different from your textbook exercises that you normally do in the classroom, right? This is more interpretation. Where you are looking at given information, you have to interpret the data, find solutions, and identify how you would deal with a particular challenge that you are faced with. Okay, guys? So don't stray or go away, Lloyd. Just give them a break.
Yes,
and
guys.
Send them back to me.
It is time for a little bit of a break, guys, but don't go anywhere. Guys, remember you can still win that Sony Xperia. We're having a third round of the Sony Xperia competition. You can win that Sony Xperia L all for yourself. All you have to do is go onto the Facebook page and enter that competition. All the details as to how to enter and how to win are on the competition page. So guys, but don't go away. We'll be back with more counting. Welcome back, Matric Mindset learners, to today's geography lesson. Guys, remember, sorry, I think we got the wrong subject here. This is accounting.
Yes, I don't have the faintest idea.
We don't know what's going on with that.
Geography, Lloyd, really?
Anyway, guys, sorry, I'm having a little bit of a brain slip here. Welcome back, Matric Accountant students. There we go, I got it right.
That's the one.
Okay, guys, but before we carry on, remember there's 4 Sony Xperia Ls to give away. All you have to do is get over onto the site and enter that competition. You could also walk away with one of 60 55 Rand airtime vouchers. And all you have to do is enter, guys. Get over onto the site, like a few pictures, and it could be you, guys. So if you want a brand new phone, get over there. But before we get carried away with the geography thing, let's carry on with the counting.
I think so too. I can do a geography lesson if you want me to.
I'd rather stick with this. Is more, yeah.
That's it, guys. Accounting, the A subject.
Yes,
the accounting subject. Okay, guys. So now coming back to our question. The question says, check number 1024 was issued to a creditor in part payment of an account. Explain how this check should be dealt with when in the financial statements. So obviously it's check number 1024, right? And how should it be dealt with in terms of the financial statements? Because remember, it's the end of the financial year. So immediately the question is alluding you to something. Which check? Check number 1024. Let's get to check number 1024 and see what it's about. Here's check number 1024. Important, guys. Read. And dates. Dates are very, very important. Which dates am I referring to? The dates that you eat. Very nourishing, eh, Lloyd?
Yeah.
Okay, so guys, watch, cut down the dates, remember? It's exam time. Make sure that you are focused. Okay, now, this check is dated the 7th of May 2013. At what point are we working? We are on the 30th of April 2013. So immediately it comes to your attention that this is a post-dated check that has been issued by us. Right. Okay. And what is it now? It's the end of the financial year. So now, what are we going to do about it? In reality, in real terms, has the money left our bank account? And your answer is an emphatic no. No. The money has not left our bank account. So in reality, that bank account balance that is showing currently in our books, is it correct? The answer again is no, it is not correct. It's not reflecting the financial position at that date as of the 30th of April. Why? Because we have recorded that transaction in our books, whereby we debited our creditors' control and we credited our bank account. So guys, when you are faced with something like this, make sure, now not only in bank recon purposes, because this could have featured in the balance sheet as well. So in other words, if you know it here, please make sure that you apply it in your balance sheet as well. So what is the entry that we put through? Watch what we're going to do. We're going to say a debit to bank, a debit to my bank account. Reason? Because in reality, that money has not left our account. So increase your bank, debit it. Okay? And we all know, in this particular instance, that your bank is an asset account, and when you're debiting an asset, you are increasing it. So a debit to bank. What do we credit? We will now credit our creditors' control. And the reason we are doing that is to increase the liability. So in other words, the reality of the situation is we've issued a post-dated check, correct? We've recorded it in our books, but the money has not left our bank account. And therefore, the entry needs to be reversed for the statement of the financial position, also known as the balance sheet. And it said there that how will you deal with it when preparing the financial statements? This is what you will do. You will debit your bank account and you will credit your creditors' control. Now be careful. Be very careful when you're dealing with the balance sheet. Look at your bank account. Look at the status of your bank account. Is your bank account favorable? And if it is favorable and it has a balance of 5,000 Rand, by you debiting the bank account, what are you doing? You are increasing it. However, it's possible that the bank account may be a liability of 2,000 Rand. And by you now debiting it, what are you doing to your liability? You are decreasing your liability. So please guys, when it comes to the balance sheet, make certain what the balance is before you just add or subtract. Look at the status of the bank account. In terms of our question here, the question was, how will you deal with it? You would do what? You will debit your bank and credit creditors' control. Got it? Great stuff. Let's move on to the next question. The next question says, provide a suitable or an appropriate reason for the 880 that appears on the reconciliation statement, right? Back to my recon statement, and there's an amount of 880 here that says here, credit amount wrongly debited. Point number one, identify what is the bank recon telling me. It's telling me credit an amount that was wrongly debited. Obviously, this error has been made by whom? This error has been perpetrated by the bank. That is why we corrected this error in the bank reconciliation statement. Because if we had made the error, we would have corrected this error where? In our cash receipts journal or our cash payments journal. But the fact that the error has been corrected in the bank recon tells you, number one, this error has been made by the bank. Now, what type of error? If the detail tells us credit amount wrongly debited, in other words, the bank debited our account erroneously by error, and that is why they're now crediting it. So what type of error could possibly have been made on our bank account? Let's look at the possibilities. One, provide a suitable reason for the 880. One, they may have duplicated the bank charges. So the bank charges figure in error could have been duplicated. One. Number two, the other possibility, I'm giving you more than one, just to show you that in some instances in the exam, there's more than one possible correct answer. And it doesn't mean that you don't have what I have that's going to be marked wrong. Certainly not. Sometimes you even find in the memos, in your solutions, you see any acceptable answer. So there are a host of possible answers. Another possible answer here is that they may have processed a debit order twice. Okay, so there may have been a debit order that was processed twice through our account. So in other words, what was important for you to ascertain was the fact that the bank had made an error and subsequently the error had to be corrected. Okay, next question. The large outstanding deposit of 11,240 Rand was investigated. It was established that 5,000 Rand of that amount was income from sales received on the 2nd of April 2013. That means very early in the month. The cashier responsible for deposits at that time has subsequently resigned. Smell a rat? Maybe. Management has accepted that this money will not be recovered. Okay? Something has gone awry. There's a problem. Money is missing. How much is missing? 5,000 Rand was for sales that took place when? At the beginning of the month, very early in the month. So it had to be reflected. Let's see what the question wants us to do. What accounting entries or entry must be made to adjust the records? Clearly you can see we have lost moolah. We've lost cash. So you're going to debit an expense account. What is this account called? This account is called loss due to theft, because certainly the money is stolen. So you're going to debit an expense account. We're not going to recover that money. We have shown it as if the deposit has been made. So we have debited our bank account. So to reverse that money out of our bank account, we will credit our bank account. So once again, my double entry, a debit entry of loss due to theft, because certainly the money has been stolen, and we credit our bank account, indicating that we have to decrease the bank account. If it's an asset account, decreasing it by crediting it, or if the bank is in overdraft, we're increasing our liability. So please, what is critical, what I want you to see is that whenever you're dealing with the bank account, yes, in the bank recon and everywhere else in the curriculum, any part of any other question, identify the status, not your status, the status of the bank account. Is my bank account favorable or is my bank account unfavorable? That will then indicate to you whether it is an asset or a liability. Okay, next part of the question. Name and explain the GAAP principle applicable to the adjustment above. GAAP principles. So can you see? Look at integration in this question. We're talking bank recon, but here they're talking about GAAP principles. In other words, make sure that you can apply your knowledge that you have accumulated over the year with respect to the different parts of the accounting curriculum. It could be examined in any section. That's the point that I'm trying to make here. So, GAAP principle here is your prudence concept. And what is this principle all about? The prudence concept means that we are conservative in our approach. What does that mean? It means that we anticipate future losses, but we do not anticipate future gains. So we're adopting a very conservative approach, right? So remember, with the prudence concept, we're saying that we are using a conservative approach, or another word that sometimes that's often used is we're being pessimistic when it comes to our expenses. So we realize the loss now, but we do not anticipate future gains. Okay, so we've dealt with that question in terms of the prudence concept and being conservative in our approach. Right. Provide 2 suggestions that the business can employ to prevent a recurrence of what happened. In other words, watch now. The question wasn't bank recon. The examiner has brought in an aspect of internal control. Let me start off by saying that the purpose of internal control is to do what? And the answer, that should come to your mind immediately is that internal control is there to safeguard the assets of a business. Very important. What is the purpose of internal control? Once again, to safeguard the assets of a business undertaking. Now, how could we have prevented the cashier from embezzling funds from us? Number one, we can say, talk about segregation or the division of duties. Allow me to explain. When we say segregation of duties, we are saying that the person who is receiving the money should not be the same person that is depositing the money. So we're segregating, we're separating the duties. We could also talk about division of duties. Make sure that you employ a senior manager to be involved when it comes to handling deposits. So somebody senior in the business should be tasked with that job of doing what? Of taking the money and depositing it in the bank account. Okay? You can also look at rotation of duties. What do we mean by this one here? Rotation of duties. By rotation of duties, we mean that at certain times, a different person is put responsible for different jobs. In this way here, a person doesn't become accustomed to a particular job, and in this way here, you can then make sure that the monies will be deposited intact daily. What else can be done? Make arrangements with the banks to inform us by means of an SMS. Okay? We're into the social media, aren't we? So let's use it effectively for internal control. Make sure that every time a deposit takes place into our account, let the bank inform us. So in this way, we can check, okay, this deposit has gone through our account. Let's check whether it corresponds with our records or not. Obviously, there are many other reasons that you can think of, but primarily, now once again, I want to allude you to what I'm doing here. Watch what I'm doing. I didn't write paragraphs of information. I brief and to the point, and that's what we allow for in an accounting exam. Bullet your answers. You don't have to write lengthy, copious paragraphs. Just brief information, answering the question, valid and to the point. Okay, guys, that was the question on Bank Recon. If you stay with us, there are more recons to follow. So the place to be is Mindset Learn.
That's right, guys. Place to be is right here, Learn Extra Live. We're doing accounting, and we'll be back with more reconciliations. Don't go away. Welcome back, Mindset Learners, to today's accounting lesson with Ashraf. We're in studio here with Ashraf, and he's teaching us some accounting. But before we carry on with the lesson, Ashraf, we have some questions.
Certainly, Lloyd.
One of the questions is from Jan Mashaba, and Jan Mashaba asks how to treat this example.
Okay.
A deposit of 1,400 Rand appeared on the bank statements. This was incorrectly recorded in the accounts of the business, and the bank will correct their error. What do we do there?
Okay. Step number one, identify who has made the error. Clearly, the indication is that the bank has made the error, and if the bank has made the error, it means that the bank will correct this in the next month's bank recon. Now, just to take you back and explain this to you here, can you see in this particular one that we were dealing with, it said here, credit amount wrongly debited. In your case, it will say debit amount incorrectly credited. Got it, Lloyd?
Okay,
so the bank has made the error. The bank will correct the error in where? In the bank reconciliation statement. That's where it will be entered. And therefore, The point that I'm trying to make here, guys, is errors made by the bank are corrected in our bank reconciliation statement. Why? Because your bank reconciliation statement is an extension of your bank statement. You start off with your bank statement balance. As you can see, there's my bank statement balance, and we extend on it to indicate any other differences.
Okay, cool. And there's just one more question by Pinda Manana. And Pinda Manana says, what is the difference between balance on bank statements and balance on your bank account?
Okay, Pinda, very simple. The balance on your bank statement is the bank statement that you have received from your bank. That record of the transactions as per the bank's records. How do you know what your balance is? They will send you a statement indicating to you whatever transactions you have entered into with them. But at the same time, you also have a record where in your bank account. So therefore, it becomes necessary, like I alluded to earlier on, the balance in your bank account is your balance as per your records in your general ledger. And the bank statement balance is from the bank's perspective. So we have two perspectives here, the bank's perspective and our perspective. That is why we compare these two balances and we reconcile them to ensure that we safeguard our asset. Which one? Bank cash.
Cool, guys. Remember, you can keep your questions coming in, and if we don't answer your question live, you can go to our help desk. The link is on our Facebook page. But let's get on with the lesson.
Thank you, Lloyd. Okay, guys, so we're moving on with the lesson, and the next part of the lesson is a debtor's age analysis. What is a debtor's age analysis? I'm sure I've said this before, but I'm going to say it again. It has absolutely nothing to do with the age of the debtor. It has to do with the age of the debt. In other words, look at the information, and what do you find? You can clearly see that amongst your debtors, you have Nika, Nirmal, Mlotya, and Nomhle, and this is the debtor's age analysis. Just to give you an example, let me explain this to you. If we look at Nika, what do we find? We find that 220 Rand is outstanding for what period? For 60 to 90 days, right? Then 820 Rand is outstanding for between 30 and 60 days. And then the current amount outstanding is an amount of 1,230, which is current in terms of our transactions with Nika. So your debtor's age analysis, if we have to summarize it, what does it do? It gives you the age of the debt. And therefore, important information. This debtor's age analysis will provide you with useful information in allowing you to take certain actions. Everything that you do in accounting, there's rationale behind it. There's a purpose behind it. So why do we prepare this debtor's age analysis? So that it gives us indications of which debts are outstanding, for what period they are outstanding. It also assists us in taking decisions at management level as to how to treat our debtors. Okay, so that's a brief summary of a debtor's age analysis. Let's look at the first question. Aha, it looks like I preempted it. Explain the usefulness of a debtor's age analysis to a business. Definitely, what can we do? We can find out which debtors are owing us money, and not only owing the money, but not only owing, but also telling us for how long is the debt outstanding, right? So obviously there's usefulness in this debtor's age analysis. What does it tell us? It also indicates to us who must we send reminders to, right? What else will it tell us? It will tell us which debtors need to have, we have to put a block on their accounts. Certainly, if a debtor is outstanding for 30 and 60 and 190 and 120 days, surely you can't keep on selling goods on credit to that debtor. You need to take some kind of action. Put a block on that account and say, sorry, we will not allow you to buy anymore because in terms of your debt, this is outstanding and you haven't met your obligations. Because we have to protect ourselves. It also gives you an indication of the possible bad debts that you may encounter. Remember? From this debtor's age analysis, you can work out some kind of a calculation to find out what are the possibilities that our debtors may not settle their accounts. What actions can we take? Like we said, you can send out statements, you can send out reminders, and other means we can use to get our money so that our debtors settle their accounts promptly. Okay, the next question says, calculate the debtor's control balance. Okay, back to my information. There's my information. I need to calculate what amount is outstanding to me in terms of my debtors. And what are we going to do? Right, so the amount that's outstanding to me is 220 plus 820, 220 plus 820 plus 1,230. That's the one debtor. Okay? There's another amount of 1,400 outstanding. So, plus 1,400 is equal to that. Plus, what else is outstanding? There's an amount of 980 outstanding. Can you see what I'm doing? I'm adding all the amounts that are due to us. And there's a further amount of 170 plus 740. 170 plus 740. And if I total that, 5,560. That is the balance as per my debtor's control. Watch this here, guys. 5,560. Where did I get the information from? I took all my debtors into consideration. Every amount that was outstanding to me, I added it up. And I included it as the total of my debtors that are outstanding to me. Got that? Good. The amount was what? 5,560. So my answer would be 5,560. Okay. And you've seen what I've done? I've added up all the amounts that are outstanding to me from my debtors. Next question says, if Z Nomsle decides to settle her account immediately, how much would she be expected to pay? Show calculations. Once again, an appeal to you. I'm begging you, right? Make sure that you show your calculations in all your examination papers, because remember, you're now preparing for that final exam. And when you show your calculations, you will find that part marks will be given to you. So don't disadvantage yourself. Make sure that you show your calculations. Right, so going back to the story with Nomsle, let's see what's happening there. Here's my credit terms. 30 days less 5% discount, and over 60 days interest is charged at 12% per annum. Okay, so clearly we have credit terms. Those are the terms that are set out for our debtors, that if you settle within this period, you get an additional 5% discount. If you go over 60 days, then we use interest. Okay, remember the carrot and the stick? I spoke about it in an earlier lesson. Carrot, it's an incentive that we provide. If you settle, we give you discount, and if you don't, we use the stick, we charge you interest. Right, so it works, doesn't it? Sometimes you have to use the carrot.
You have to chase people sometimes.
Exactly, and if the carrot doesn't work, we unfortunately have to charge you interest. Okay, guys, so keep that in mind. Now, Nomple is owing us 740 Rand, which is current. Okay, so immediately I say, this is what I want to do. 740 Rand. And if she settles now, she's only going to pay 95% of her debt. Why? Because she's entitled to a 5% discount. So therefore, we say 740 Rand times 95 is equal to 703. So this gives us a figure of 703 Rand. And the other amount that's outstanding is an amount of 170 Rand. So therefore, we add 170 Rand, and we don't need a calculator for this one. Total 873. So if Nomhle was to settle her account immediately, what amount would we receive? We'd receive the current amount, which is subjected to the 5% discount. Can you see that? Now, once again, let me draw your attention to something else. When you are calculating this here in terms of budgets, remember, the discount factor will indicate to you what percentage you are receiving. Use these shortcuts. I didn't take 740 and then calculated 5% and then subtracted it. No. Take the 740 times the 95%, because that's what you're going to be receiving. Got it? And in that way, you calculate the 873, and there you got your 4 marks. A for away. Okay, next question. What's my next question? Let's go. Explain 2 measures.
A little bit of a love-hate relationship with
Is it with me? There's it. Explain 2 measures a business can introduce to improve the collection of money from the debtors. We've spoken about it already, haven't we? 1, you provide incentives. Like what? We've mentioned it, haven't we? Incentives, for example, offer discounts for early settlements. Okay? Provide discounts, incentives. Dangle the carrot to your debtors. If they settle within, give them the discount. And if that doesn't work, if the discount is not working, then what are we going to do? We're going to punish them and charge them interest on their overdue accounts. Okay, so in this way, you can encourage your debtors to pay you timeously. Lloyd, I think it's time for our challenge question, isn't it?
Yes, yeah.
Okay, what was the challenge question? Do we have
Yeah, so the challenge question grade 12s was how many types of creditors reconciliations do you get? And I have to say, 100% of the answers was 2.
Absolutely. You get 2 types of creditors reconciliations. Once again, guys, listen carefully. The one is an internal one where we are reconciling what? The creditor's control account with what? With the creditor's list. Got that? That's internal. That's within our business. Why? Because of the triple entry principle. The second one is where we reconcile the creditor's statement with what? With the creditor's account as it appears in the creditor's ledger. Guys, we've worked very hard on reconciliations. Make sure that you understand it and you ace it in the exams. And like I always say, guys, you've got to aim for the moon. Because if you don't get there, definitely you're going to be an accounting shining star. Ashraf's accounting shining star.
Cool, guys. I'm sure you agree, but Ashraf taught us a very good lesson today, and I hope you guys have enjoyed it. But before we go away, this is about all we've got time for, but congratulations to Kevin Afonso. You've won yourself this brand new Casio calculator for answering last week's Test Yourself question. I hope you use it well in this upcoming exams, and I'm sure it'll come into good use. So, guys, until next time, I hope you guys keep well and keep learning.
Cheers.